In today's video, there is one question you need to answer before the SpaceX IPO hits the market. Do you actually understand what you are buying, or are you about to get it wrong? Ron Baron, the founder, CEO, and portfolio manager of Baron Capital, recently joined Squawk Box to talk about the upcoming SpaceX IPO, the future of Tesla, and his perspective on Elon Musk and the companies he is building. And according to Ron Baron, this is going to become the largest company on the planet. I'm going to show you the CNBC clip first, and right after that I will break down exactly what he means and give you my own reaction and analysis. If you get value from this kind of content, make sure you hit the like button, share the video, and drop your thoughts in the comments. Subscribe so you do not miss the next major investing update. Let's get into it.
Let's get right to Ron Baron. He is an early investor in SpaceX. He is the founder, the CEO, and the portfolio manager of Baron Capital, which started out in 1982 with $10 million in assets under management. By 1992, it had grown to $100 million, and today it is around $50.9 billion in assets under management. And Ron, I want to thank you for being with us this morning.
To be exact, $55,898 million.
55 billion?
55 billion.
Okay, when you were on with
million.
us in November of last year, it was 45 billion. What grew?
SpaceX grew. I guess, I don't know, but I mean, that's the big one. So that happens to be 15 billion out of our 55 or 56 billion dollars is SpaceX, and Tesla's our second biggest at 5 billion. So we made our clients $61 billion in profits, and ourselves, since 1992 when we had $100 million. 61 billion came from 100 million. And now I think that in the case of Tesla, which we've been investing in, met him in 2010 in an IPO. Took me 4 years to become convinced that he was going to be successful. I thought he was brilliant, kept talking to him, kept visiting him. 2014, go to visit him again and said, man, I have to invest in this now. Now is the time. Stock triples from 25 to 75. I don't own a share. It doubles again. The pain is too great. and then we invest $400 million between 2014 and 16 and make about $8 billion so far in profit. And I think we're going to make 5 times that amount in 10 years. And then SpaceX, starting in 2017, because I have this relationship with him, it's very good. And I learn about SpaceX, and I'm interested in it. I say, I'd like to invest in that. And they do these tenders twice a year in SpaceX because every single employee is a shareholder in SpaceX. They say, Becky, you are this fantastic engineer. You're making $250,000 a year, but you're now worth $5 million. Don't you think it'd be a smart thing to sell some of that stock a little bit to put the money in the bank and protect your family? So they have these tenders twice a year for $1 billion a piece. And we've been one of the largest, if not the largest purchaser in each of these deals. And recently, and they get oversubscribed without any announcements and no bankers, been oversubscribed in one afternoon. And so we're treated just like one of the largest institutions in each one of these offerings.
Basically, you are paying the employees so that they can become more liquid and hold on to those things. And that's how you've gotten your ownership stake
exactly.
in this private company to this
we've
point.
Invested.
Which, by the way, that's part of the reason that this company has been able to remain private for so long.
Yeah, right. And so we've invested about $1.7 billion since 2017. And that's now worth about $15 billion at current market prices. So of the 61 billion profits, 20 billion come from him.
You have been somebody who has been an apostle, kind of speaking about this for years. I can remember having a conversation with you probably back 2020, 2021. You tried to convince me to do it. We're not allowed to invest, and I had to tell you that. But you were saying SpaceX is where it's going to be. This is the investment you really should get into. Had to say no the whole way through. You're now looking at this company about to go public. And what do you think the opportunity is here? What do you think happens?
This is going to become the largest company on the planet. This is so when you go public, I don't know if it's going public at $1.5 trillion or $1.75 trillion or maybe a little bit more. But where it goes public, I think that the company over the next 10 or 15 years is going to be worth 10 trillion, 20 trillion, 30 trillion. And I could be very low on where it's going to be. So today we can talk a little bit about infrastructure.
Why? Yeah, let's talk about why. Because
so
I think like 70 billion of that would be what the public can actually buy into, I think.
70 billion is exactly right. In fact, right after the offering, then they've changed the rules so that 5 days after the IPO is completed, there will be one index in which it will be included. 10 days, there will be another index in which it's included. 15 days, there will be another index in which it's included.
You're talking about the Nasdaq index?
The president of the New York Stock Exchange came, when I was young, I drove an ice cream truck one summer, and maybe a summer and a half. And one of the things that was important to me was I had to get my Carnival Bar ice cream truck to the beach route before Mr. Softy got there. And so so one of the guys in my office said, and the New York Stock Exchange president wanted to come over and talk to me for some advice. And my friend says, Pat Padalino is our chief operating officer, said, do you ever think when you're driving that ice cream truck that the president of the New York Stock Exchange is going to come talk to you for advice? Are you serious? And so I said, well, I was able to beat Mr. Softy to where he was going. So
he came to ask you for advice about whether they should put that into the index early?
Well, she was telling me about the different indexes, but she was also hoping that they would list on the New York Stock Exchange, and they chose the
Nasdaq.
I think they've chosen Nasdaq,
yeah.
which is where all the technology companies are. And she was saying that there are all these other things that she could offer.
But that was part of the auction process where the two exchanges were bidding it up, saying, hey, we can offer to get you into the index sooner?
I don't know. I think they've pretty much decided that as a leading technology company, they should be listed on Nasdaq, where all the other large technology companies have been listed. But there's a lot. So what enabled this company is him. So he comes up with the idea that you'll be able to launch a rocket and reuse it. And no one ever did that before, and no other rocket company was interested in doing that, because if they did, then what would happen is that there would not be a demand for as many rockets. So nobody wanted to do this. And they always said it was impossible. They said it was impossible because nobody tried. Mm-hmm. And when they did try, nobody's been able to accomplish it. So that's what enabled this. That's what enabled us to have Starlink. Mm-hmm. And Starlink, after you have that, and we have the Falcon 9, then it brings it up and comes back. Then we decided, hey, wait, there's a demand for in space data centers, and instead of having data centers on our planet, where it's very, very difficult to get. The governor won in New Jersey because she said our electricity bills are too high. We're going to stop this data center construction, making our electricity bills go up. Her roommate, when she was in Congress, is a candidate for governor in Virginia. She won, same idea. So here you have people who are saying,
not in my backyard.
Yep,
yeah.
That's the deal.
And nobody wants it in their backyard, so send it
I would
to
have
space.
thought they would like it because it would pay taxes, but the people don't like it because not enough jobs and because their electricity bills are going up.
And
so
the water usage, too.
Water is short, and electricity is a problem.
And the water you need for cooling, which you don't need in space.
Right. You don't need the cooling in space, number one, as long as you have giant radiators. And then electricity, which is a huge cost, you don't need that either because you're using the sun. So basically, you're getting free electricity and free cooling once you get into space. And so now, because of the idea of going to space, we've now developed the Starship. And the Starship, once that works, is going to be 100 times as power. I guess it's 200 tons that they could bring to space. And now the Falcon 9 brings, I think, 17 or 18 tons to space. Mm-hmm. So huge unlock is coming from Starlink.
Ron Barron is not talking like a cautious Wall Street portfolio manager anymore. He is talking like somebody who genuinely believes we are entering an economic transformation that will completely redefine what the largest companies on Earth look like over the next 20 years. And at the center of that belief is Elon Musk and SpaceX. One of the first things that immediately stood out to me in this interview was the sheer size of Barron Capital's exposure to SpaceX. Ron casually mentions that out of roughly $55 billion in assets under management, around $15 billion is tied to SpaceX alone. Think about that for a second. Most major investment firms diversify aggressively because they want to reduce risk. Ron Barron is doing the opposite here. He is concentrating massive amounts of capital into what he believes are generational companies. And what makes this even crazier is the return profile he described. He says they invested roughly $1.7 billion into SpaceX starting in 2017, and now that stake is worth around $15 billion. That is one of the greatest private market investment wins we have ever seen publicly discussed in real time. But what I found most interesting is not even the numbers themselves, it is the framework Ron Barron uses when he evaluates Elon Musk. He talks about initially meeting Musk during Tesla's IPO period around 2010 and not fully committing right away. He says it took him years to become convinced. That part matters because a lot of people rewrite history and pretend they always believed in Elon Musk from day one. Ron is being honest here. He saw the brilliance early, but he still struggled with execution risk, and honestly, I think that is a very relatable point for investors. Sometimes the biggest investing mistakes are not buying bad companies. Sometimes the biggest mistakes are failing to act aggressively enough when you recognize exceptional leadership. Ron basically admits the stock tripled before he owned any shares. Then it doubled again before he finally committed serious capital. That emotional pain he described is something almost every investor has experienced at some point. Watching a company you understand continue running higher without you can be brutal psychologically. But instead of letting pride stop him, he adjusted his thinking and invested heavily. And according to him, that $400 million Tesla investment eventually generated around $8 billion in profit so far. But then he says something even more aggressive. He believes Tesla could generate 5 times that amount over the next decade. Now personally, I think this is where opinions will sharply divide. There are still many investors who think Tesla is primarily a car company and already overvalued. But people like Ron Barron clearly view Tesla differently. They see it as an artificial intelligence and robotics platform disguised as an auto company. That distinction completely changes the valuation framework. And this is important because you can hear the same logic being applied to SpaceX. Ron is not valuing SpaceX like a traditional aerospace business. He is valuing it as foundational infrastructure for the future economy. That is why he makes the jaw-dropping prediction that SpaceX could become the largest company on Earth and eventually reach a valuation between $10 trillion and $30 trillion. Now on the surface, those numbers sound insane. Even hearing them out loud almost feels disconnected from reality. But if you slow down and actually listen to the reasoning behind the argument, you start understanding why he believes it. Ron's thesis is built around one simple idea. Reusable rockets fundamentally changed the economics of space access. Before SpaceX, rockets were basically disposable. You launch them once, they burn up, and then you build another one. Imagine if airlines operated like that. Imagine if every airplane got destroyed after a single flight. The economics would be impossible. What Elon Musk did with Falcon 9 was create reusability at scale, and according to Ron Barron, that breakthrough unlocked entirely new industries that previously could not economically exist. This is where the interview suddenly shifts from just talking about rockets into something much larger. Ron begins discussing AI infrastructure, data centers, energy consumption, cooling systems, and why those problems could eventually push computing into space. And honestly, this was probably the most fascinating part of the entire interview for me because it sounds futuristic, but there is actually logic behind it. Right now, artificial intelligence is creating explosive demand for data centers. Every major tech company is racing to build more compute infrastructure, but those facilities require enormous amounts of electricity and water cooling. Communities are starting to resist them because they strain local grids, consume water resources, and increase electricity prices. Ron references political resistance already emerging around data center expansion, and this is a real issue. AI models are becoming so power-intensive that energy infrastructure itself is turning into a bottleneck. So then Ron takes the idea further. If launching payloads into orbit becomes dramatically cheaper thanks to Starship, why not eventually place certain computing infrastructure in space? And this is where you realize Elon Musk and SpaceX are thinking on a completely different timescale compared to most companies. Ron explains that space offers free solar energy and natural cooling advantages. No land constraints, no local political opposition. Potentially unlimited access to sunlight for power generation. If launch costs collapse enough, entirely new economic systems become possible. Now, do I think we are about to see orbital AI data centers next year? Probably not. There are still enormous engineering and operational challenges. But I also think many people underestimate how quickly impossible-sounding technologies can become viable once economics improve. Remember, reusable rockets sounded ridiculous to most experts too. Another thing I found interesting was how Ron described the internal structure of SpaceX ownership. He explains that SpaceX employees receive equity and participate in tender offers, where outside investors purchase shares directly from employees. This is actually a very smart system because it allows employees to gain liquidity without forcing the company to go public early. Ron basically explains that SpaceX can remain private because employees still have opportunities to monetize portions of their holdings during these tender events. And what is amazing is how oversubscribed these offerings apparently are. According to Ron, these billion-dollar tender rounds fill almost instantly without traditional Wall Street marketing or investment banking roadshows. That tells you institutional demand for SpaceX is absolutely enormous behind the scenes. Honestly, one thing this interview really highlighted for me is how much private market investing has changed over the past decade. In previous eras, companies would rush to IPO early because they needed public market capital. Now, elite private companies can stay private for years while still accessing massive pools of money. In many ways, the biggest gains increasingly happen before public investors even get access. That is also why the potential SpaceX IPO is being treated like such a historic event. Ron describes it as potentially the largest stock debut in history. He also points out how rapidly SpaceX would likely enter major indexes after listing, forcing passive funds and institutional managers to buy shares almost immediately. And this creates another interesting dynamic. If SpaceX eventually becomes public with a relatively limited float compared to its massive valuation, demand could become extremely intense very quickly. Now, obviously, there are risks here too. I think it is important not to get swept entirely into the excitement without acknowledging reality. Space remains capital-intensive. Regulatory risks exist. Technical failures can happen. Competition from governments and other private companies could intensify over time. But at the same time, you cannot ignore the execution track record anymore. SpaceX already transformed launch economics. Starlink already became a massive global communications business. And Starship, if successful, could lower launch costs even further by another order of magnitude. That is really the core bet Ron Barron is making. He is betting that reducing launch costs changes civilization-level economics. And honestly, whether somebody thinks he is right or wrong, this interview was a reminder that the biggest investment opportunities usually sound irrational before they become obvious. Nobody thought Amazon would dominate global commerce when it sold books online. Nobody thought Nvidia would become one of the most valuable companies on Earth because of gaming graphics cards. And very few people thought reusable rockets would work at commercial scale either. What Ron Barron is essentially saying here is that SpaceX is not just another company. In his view, it is the infrastructure layer for the next industrial revolution. That is an incredibly bold statement. But after listening to this interview carefully, you can understand why he believes it so strongly. Whether you agree with his $30 trillion outlook for SpaceX or think it is too aggressive, the underlying message is clear. He is not valuing this as a traditional aerospace company. He is pricing in a future where space infrastructure, reusable rockets, and global connectivity reshape entire industries. Now, the important part for you watching is not whether you believe the exact valuation. It is whether you understand the shift in thinking that investors like Ron Barron are making. Because if they are even partially right, the early positioning around companies like this could define the next decade of market winners. But at the same time, these kinds of projections always come with uncertainty. Execution risk, competition, regulation, and timing all matter more than hype or headlines. So the real edge is not in blindly agreeing or rejecting the narrative, but in understanding both the upside case and the reality behind it. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. I want to hear your view on this one. Do you think SpaceX can actually justify numbers like this, or is the market getting ahead of itself? Drop your thoughts in the comments. Thanks for watching, and I will see you in the next one.